How's it going, guys? Christos here and welcome back for another video. So in today's video, I'm going to be going through some common investing terms that I believe every single beginner investor should know. I'm going to basically be going through these terms in my own words, so it's a little bit more relatable to the beginner investor, but nonetheless, I believe that every single investor should know these terms. And this is going to be part one of a 2 or 3 part series. Let's see how this one goes to start off with. But nonetheless, like this video if you are interested in this type of content, and subscribe to the channel if you haven't already. But having said all that, let's get straight into it. All right, so let's start off nice and simple and let's work our way up to more advanced terms, and hopefully you pick up something that you don't know. And I guess let's start off with one of the most basic ones, and that is a stock symbol or a stock ticker. Both mean the same things, but basically all this is the short code of a stock that is listed on a stock exchange. So for example, we've got Apple stock, their ticker would be AAPL. You've got Coca-Cola, their ticker is KO. You have got Walmart, their code is WMT, and then you have Disney, whose code is DIS. You get the point. This is basically a short coded symbol that represents that company on a stock exchange. Next up, we have bull market, and basically all a bull market is a term that people use to say they are confident about a company or a market's price going up in the near future. So basically, if someone is saying, I am very bullish about this stock, or I'm very bullish about this company, all they are saying is they are very confident about the company and they expect their stock price to rise in the near future. On the flip side, we have a bear market, and it's basically the opposite. So this is when people are not confident about a stock or not confident about its stock price, and they are a bear of that market. So a common thing that you'll probably hear is someone saying, I'm very bearish on this stock or this company, and it basically is the opposite, where they think that the stock is going to go down in the future. Next up, we have something which is called going long, and when somebody says they are going long or they are longing a stock, all they are doing is betting that that company share price will go up over time, and they are buying low and they are selling high later on. From there, we have going short, which is obviously the opposite of going long. Instead of someone betting on a stock is going to go up in the future, they are betting that that stock is going to go down in the future. These are commonly known as short sellers or shorting a stock. Next up, we have a term called averaging down, and basically all averaging down means is, let's say you bought a stock at a certain price and then that stock was to go down over time, but you decided to buy more of that stock at a lower price, eventually making your average cost per share go down over time. That is basically what averaging down is, where you are basically averaging your cost per share over time, more commonly known by the traders today as buying the dip. Next up, we have a stockbroker. So back in the old days, it used to be a physical person that you'd actually have to ring up and call to make a trade for you. But nowadays we have online stockbrokers, and basically these are the people that buy and sell shares for you, and in return you pay them a little bit of a commission. However, in today's society where we have modern day technology, there are actually some stockbrokers that offer commission-free trading. I actually use a couple of them, one being FreeTrade and the other being Trading 212, and you can actually sign up to those in the link in the description down below. But basically, a stockbroker is somebody that buys and sells shares on your behalf. Next up, we have a stock exchange, and basically all a stock exchange is a place where stocks are traded every single day. So for example, we have the stockbroker who actually goes and buys and sells the shares, but they have to go somewhere to actually do that, and that is the stock exchange. So for example, in New York, we have the NASDAQ, we also have the New York Stock Exchange, and then in London, we've got the London Stock Exchange. These 3 are all different exchanges, and different types of companies and stocks sit within that exchange. Next up is a really simple one that you may have heard quite often on the TV, and that is the open and the close. And basically all this means is the opening of the stock market and the closing of the stock market. So for example, the stock market in New York opens at 9:30 Eastern time. This is classed as the open, the second that stock market opens. And then at 4 p.m. we have the close, which is when the stock market is shut. Each time a bell is rang to initiate each of these trading times, and these are classed as the open and the close. Next up, we have something called yield, and basically yield is the percentage that you will receive from a company in dividends. So for example, if a company was a $100 share and their yield was 1%, that would mean you would receive a $1 dividend. One thing to note is that not every single company pays a dividend, and the way you can check that is by actually heading over to their company summary page on a website like Yahoo Finance, and that will actually tell you whether they offer a dividend or not. If you wanted to check out a video I made on how to do that, I'll leave a link up in the description above here, and I'll leave one in the description down below. So make sure you go and check that out. Next up, we have sector, and basically sector, all that is basically a way of grouping different types of companies into different sectors. For example, we have Apple, which is in the tech sector. We then have Walmart, which would be in the consumer services sector. We've then got Facebook, which would once again be in the tech sector. Then we have something like Wynn Resorts, which would be in the leisure sector. One thing that I pay close attention to within these sectors is when I'm actually balancing my portfolio, because I want a nice, diversified and lowest risk possible portfolio. I'm trying to get companies from different sectors and a nice balance. For example, I don't want to be too tech heavy, because if something was to go wrong in the tech industry, that would damage my portfolio quite heavy. But if you are balanced across and spread across different sectors, you don't experience this as much. Last but not least is a rally, and basically all a rally means is when the stock is going up at a fast rate. This is something that every investor wants to see. So if you have ever heard of this stock is rallying, that means that a lot of people are getting behind that company and pushing that stock price up. This is always a positive sign in the stock market. All right, so there is about 12 or 13 different beginner stock trading and investing terms that every single beginner investor should know before getting involved in the stock market. If you want me to up this and get it a little bit more advanced in the next video, make sure you do like the video down below, leave me a comment, and of course subscribe to the channel if you haven't already. That really does tell me that these videos are useful. But apart from that, I will catch you guys in the next video. Take care, and I'll see you soon.